Okay, folks, hello, 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 hello. It's Bob Safale, and we are here with the Digital Frontier News webinar broadcast. And I tell you what, a lot of people are still piling in. We are definitely headed for another highest ever in terms of crowd size. This is really remarkable. Remember, we only started this, 5 weeks ago? And it just gets bigger and bigger and bigger and bigger. Now, remember, every week we're here at 8 p.m. Eastern Standard Time for our event. And like I like to do every time, I like to make sure you actually can hear me. So everybody, you see in the upper right-hand corner of your thing, you have a little hand. I want you to click on that hand if you can hear me loud and clear. Just click on that little hand. Okay, I want to see some more hands. Come on, raise your hands up in the upper right-hand corner. Just want to make sure you can hear me. I do see some hands popping up back and forth. There we go. Fantastic. All right, folks. Well, listen, we are very excited tonight. We have two segments that are going to blow you away. And I want to remind you of a couple things before we start. I always like to try to remind you that you are really, really, really early in the crypto world. In fact, I just want to show you again. This is the number of wallets that are out there that are being used. That means people are actually buying and selling coins. Now, as of the end of the fourth quarter, 2017, we are now over 21 million wallets, and it's growing now. It looks like it's growing now at a rate of almost 4 million new people now. Probably by next quarter, end of March, we'll probably at 25, 26, 27 million wallets. But that's nothing. Remember, world population is over 7 billion people. In developing countries, or developed countries, let alone developing, but developed countries, we're talking almost 3.5 billion people. So to have only 22 million people with wallets, that means it's less than 1% adoption rate. And it's growing like crazy, yet, I just want to show you how early you are. And remember, the famous adoption rate formula, it's called the S curve. It lets you know how early you are. Okay, now look at that. The innovators are the first 2.5%. Okay, you guys are at the very, 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 very front. We're still tens of millions of people before we even get to the early adopters. Now, I want to just remind you real quick. The way that you are going to take full advantage of the fact that you're at the innovator level is you've got to get as much knowledge as possible. This is your ace in the hole. This is your big, big, big advantage, that you are early. You have to, I can't stress that enough. You got to arm yourself with knowledge. You are way ahead of everybody else. So any chance you get, you got to get info. Now, I want you to remember tonight, it's all about, we're going to give you insider secrets. We're giving you cutting edge training. We are going to be doing our drawing at the end of this webinar for 10,000 coins. Oh man, the last person that won, he was excited when he got his 10,000 coins. He forgot to send me his picture. I hope he sends me his picture so I can show you. Our earlier winner, the week before, sent me her picture. She was so cute. Any rate, at the end of this event, we will do the drawing. I now use a random generator online, so you can actually watch it. It's kind of cool. And we're doing something different tonight, which will require you potentially to email me. So please take down my email address, bob@digitalcurrencygrowth.com. bob@digitalcurrencygrowth.com. Okay, so early adopters, you have two huge segments tonight. I have got a treat for you, and I know a lot of you are already excited. You heard I've been raving about my next guest. Um, their company has been involved. Talk about early adopters. My gosh. Uh, this company has been involved with the use of artificial intelligence in forecasting stocks, commodities, forex. Oh man, I mean, holy smokes! And the founder of this company, Lou Mendelson, has been all over TV. Heck, he was on TV in 1994 on CNBC Tech Talk. And he was one of the first guys talking about artificial intelligence. You hear about this artificial intelligence now on Matt Drudge and everything. This Lou Mendelson has been talking about this for over 25 years, 24 years he's been talking about it. So we have Lance Mendelson here, and he is operating the company. Lance, I'm going to brag on him a little bit before I introduce him. Lance started in the business. This company was started in 1979. Lance got into the business at 15 years old. Okay. He was working in the business at 15 years old. And what was he doing? He was educating customers. He was involved with education of customers, sales at 15. And he was already in the management levels by 24 years old, I think by 2004. So we're talking about somebody who's grown up in the space of AI. And one of the things that really got me, it's Lance's focus on R&D, research and development. These guys have spent $10 million on research and development. So that really blows me off. I'm very happy to introduce Lance Mendelson to our show. How are you doing, Lance?
I'm doing great, Bob. Thank you very much.
Wow. Hey, buddy, I couldn't believe what I saw the other day when I went to your research and data center, your operations out there. Holy smokes. You guys are serious. You guys are high-tech guys.
Well, we've been focused on the research and development for decades, and I think regardless of what industry you're in, if you spend 20, 30, almost 40 years, next year will be our 40th year anniversary, you spend 40 years doing anything, and you're going to master it for sure.
You better. That's great.
Well, if you don't, you won't last that long. That's for sure.
That's an amen on that one. So, Lance, listen, I can't. We could actually spend 2 or 3 hours on what I saw. It was actually shocking in a good way. I mean, I went out there and I'm thinking, yeah, they talk about this product, forecasting, blah blah blah. I'm thinking, okay, I was cautiously optimistic that I would actually learn a couple things. I'm not trying to say I know everything, but boy, man, when you showed me that operations center, I was blown away. How did you start? How did Lou, your father, get the idea to do this?
Well, I mean, it goes all the way back to the late 1970s, and my father was trading commodities. I mean, this is way before cryptocurrencies, but he was trading commodities. He was trading stock options. Was just following his passion. At the same time, he was actually running a hospital here in Tampa, Florida. I was the administrator of Women's Hospital, the hospital I was born at. And that was a job, okay? That was just like a job, a way to pay the bills. But his real passion was the financial markets, because he knew that if you educate yourself, as you said earlier, arming yourself with education and have the right tools, and you combine having tools and education together, you can take something that's interesting and you can actually make it your method of providing for your family. And I don't mean just like, making a good living. I mean making a great living. And so he just started really diving into the financial markets. And then when he saw a personal computer for the first time, he went to a Radio Shack and he saw a personal computer and he said, "Oh my gosh, this is going to change the world." It's like you were showing about the early adopters. And I mean, he realized, he's such a visionary. He goes, if this computer thing takes off, which it will, I got to be in on the ground floor. So he started developing software for himself. Because, you know, when you're trading, whether you're trading stocks, commodities, cryptocurrencies, you got to have an edge. You got to have a secret weapon, something that the others don't have. And so he started developing software for himself, but then quickly he realized, you know, if I develop this for myself, that's great, but I could develop it and share it with other people and sell it to them, and that helps them. But it also helps him because, as you mentioned, just in the last 10 years, we spent $10 million in research and development. You can do a lot more research and development if you have more financial resources to pour into the research and development. So he started sharing what he was developing with people. They were giving him money to continue the R&D, and things just progressed from there. And that's what we've been doing since 1979. I mean, obviously the software's evolved, the whole world has evolved, but that's really how it all started. It started with, I think this technology is going to take off, and I think I can apply technology to the financial markets and really gain a competitive advantage. And that's what he's done.
It's really crazy what you've done. I got to tell you, before we talk about cryptocurrencies, and if ever, let me just say this real quick, and I know I said this to you the other day, Lane. I said, if ever there was a company that had something at the right time, at the right place, it is your company, because I'm sure I'm already telling you because you have over 2 years worth of data on this. But with the jumps and the rises and the falls and the rises and the falls and the change of price here, there, everywhere, and people making a killing and losing their shirt, then up and down. Boy, do you need some forecasting, don't you, in this crypto world?
It's the only way. I mean, like you said, you got to have education. You have to understand the basics. But after you understand the basics, then you have to have a tool to help you navigate and determine, you know, in trading, whether it's stocks or commodities or cryptocurrencies, and especially the more volatile the market, like cryptocurrencies are, the more imperative it is that your timing is dead on. You know, the people that got in early, they probably got out and thought, yeah, this thing's not going anywhere. The people that got in too late, they're losing their shirt. But if you can time it, that's where you make the big money.
And that's what this is, I want to start first by talking about, you showed me what, and I want to go back to stocks because many people have a pretty good grounding on that, certainly in this call. I want you to kind of give a background on what you were showing me with Amazon. Because oh my Lord, and I'd like you to kind of dive into that. And the thing that got me was you said 6 degrees of separation. Boy, you had me there, man. So go ahead.
So here's how it works, okay? And I'm gonna probably oversimplify it, but I just want everyone to grasp the idea. What you have to realize is that we are in a global economy. And that wasn't always the case. When my dad first started developing trading software, if you wanted to trade a particular stock, you could look at charts on that stock. You could read news about that company. You could just basically follow what that company is doing and make your trading decisions and be reasonably successful. But as the markets have evolved, as the whole world has evolved, everything has become global. The first time that we saw that happen was in 1987, okay? We had the 1987 stock market crash. What a lot of people don't realize is that the stock market in the US didn't just crash for no reason. It didn't come out of the blue. What happened is the markets in Asia first crashed, and that caused the markets in Europe to then crash. And then ultimately, it crossed the pond and came over here and crashed the US stock market. It was a domino effect. And so anybody who was looking beyond just the US markets would have seen the signs and been able to act accordingly. The problem is, back in 1987, traders had a very single market approach, or looking at a single stock in isolation and ignoring all of these other factors that really drive a stock. And so in 1987, my dad said, oh my God, I see what's happening. The markets are becoming global. If you want to be successful going forward in what is becoming a global economy, you have to have a global approach. So what he started doing is he started looking at, okay, if I'm trading a particular stock, what other stocks can impact that stock? started looking at different relationships between markets and relationships between stocks. How do interest rates affect stocks? How does the price of gold impact stocks? What do currency prices? They're going up, they're going down. How will that push or pull the price of a stock? And so he pioneered a concept called intermarket analysis, which means inter means between. So analyzing relationships between markets. And this was key because from that point on, the markets have just become more and more and more global. The problem is that's a ton of data. I mean, it literally gets to a point where it's humanly impossible to analyze all that data. And that's kind of what...
what struck me, if I can interject here,
Yeah.
Lane, sorry. And I know, I hope I'm not stepping on the lead here, but you know what was interesting? It's like you were showing me that here, gold could affect this company's, whose shares could affect this company, whose shares could affect that commodity, whose commodity could then affect Amazon. So it's like, oh, so go. I mean, that was...
No, you're right. I mean, that's the whole point of it, is that these relationships can be very complex. You know, if you look at a stock like Amazon, if you think, well, what other stocks or what other companies can impact Amazon? You can think of others. You can say, well, probably Walmart. You know, that's a competitor to Amazon. You can think of other online retailers. Okay, whatever those companies are doing, good, bad, that can have an effect on Amazon. But then you look broader than that. You say, well, let's look outside of just competitive companies to Amazon. You start looking at companies in other sectors. You start looking at, well, if the Dow, like, look what the Dow's been doing the last few days. You know, wild swings up a couple hundred points, down a couple hundred points. That's going to have an impact on Amazon. You look at currency prices. You look at all these other factors. And so you say, okay, how does gold impact Amazon? Well, gosh, you know, I don't know how gold impacts Amazon, but gold could have an impact on currency prices. It could affect the US dollar. If the US dollar is strong or weak, that could affect people's ability to buy and purchase online and utilize services like Amazon. And so when you take a step back and you don't just focus on Amazon and you say, well, wait a second, what are all of the factors that can affect Amazon? Now you start to get a picture of, okay, now that I've got all the facts on the table, I'm starting to put the pieces of the puzzle together, and you can start to figure out where the price of Amazon is going to go based on looking at the other markets and the other factors that will drive the price of Amazon. That's the whole key, is having that big picture perspective.
And what shocked me, frankly, was you showed me Amazon and then showed me on another screen, it must have been 150 other factors.
Yeah.
And now I begin to understand, well, you can't have 100 guys working together just tracing back to Amazon. Is this where your father and your company figured out, well, we're going to have to go to some serious computing horsepower?
Well, yeah, I mean, that's the thing is, in the late 80s, when my father started to really perceive that the markets were global, and he said, gosh, you know, if I'm really going to be successful, I've got to analyze all this global market data. But then that poses a tremendous problem because, I mean, he's merely a human, so he can't analyze all this data. So that's what led him. He went down a lot of roads that didn't pan out. Ultimately, he landed on artificial intelligence, which is something that he had experience with back in the 1960s because he's a graduate from Carnegie Mellon University. He had worked with artificial intelligence on mainframes computers. And so he's sitting here racking his brains. How do I analyze all this global market data? Aha, AI, artificial intelligence, because the artificial intelligence can mine, using deep learning, can mine all of this data, Amazon data, currency data, other stocks, interest rates, precious metals, energy prices, literally thousands and thousands of individual pieces of data, and it can sift through them, and it can find the hidden patterns that exist in that data and use that very valuable information to then predict where the price of Amazon's going to go. And we're doing that with an 86% accuracy. And folks, I got to tell you, 86 to some people, like if my daughter comes home from school, she says, hey, Dad, I got an 86 on my test. I'm going to say, well, next time maybe you should study. You know, because that's on a scale of 0 to 100. But in the financial markets, so you're talking stocks and currencies, there is no such thing as 100. So if you're bumping up at 86% accuracy, I mean, that's darn near perfect.
Yeah, well, you know, it was interesting. So I think I was asking you about a new company that had just went public This is another thing that startled me, folks. I think I asked you about a company that went public about a year ago, and he says, "Well, that's not good enough." I went, "Well, what do you mean not good enough?" He said, "We gathered data for 2 years, and then and only then do we decide whether we're going to put it on the system because you had to hit some was that I guess that was the 86% you're talking about. But you
Yeah.
said 2 years of data gathering before you even consider putting a given, whether it's a stock, a commodity, but into the system, into your platform. Let's put it that way.
That's a minimum on some of the stocks. I mean, the more data there is, the better. So, like, there are stocks where we're training the artificial intelligence on data, going back 10 years. So, the more data, the better, because the more data that we have that the artificial intelligence can analyze, the more data it can sift through. It can find those patterns, and some of these relationships, some of these patterns, they change over time. So, just when you think you've got it, it all figured out, you think you got the code cracked, then they change the combination on you. And so that's why when you mentioned that we have an ongoing commitment to research and development, it's because as the markets change and evolve, we have got to stay ahead of that so that our customers continue to have that 86% accuracy. But I mean, if a stock just goes public or a cryptocurrency just comes out and there's no real data to look at, then there are no patterns to analyze, which means you really can't forecast what it's going to do. At that point, you're guessing and you're going to lose money. So what's the point? So number one, we've got to have enough data for the artificial intelligence to analyze. And number two, there are some stocks, there are some cryptocurrencies, there are some markets that just aren't predictable. And so we've really honed in on which stocks and which cryptocurrencies are the most predictable. And those are the ones that we're serving up to our customers on a silver platter. And the thought is, if it's not predictable, you're probably not going to make money, so why even mess with it,
Yeah, that's what killed me because I got to tell you, when I said, okay, I'm sold on stocks, I'm sold on commodities, on forex, I'm sold. Now, bro, let me see what you were doing with crypto. And man, when I saw, because I had a feel for what you were doing, and you pulled up the crypto, and it took me about I don't know 10 seconds to realize because I think I know a little bit about crypto, and I know what I was doing when I was looking at plays like Ethereum and Litecoin. I looked at the charts and I realized that I would have made at least 40% more in about I'm going to say 21 days
Mm-hmm.
if I had your system. I
Yeah.
was like, oh my gosh, why didn't I meet you earlier? I was
Well,
like, oh my.
no, but here's the thing. Two things I'll say about that. Number one, yeah, you're right. The whole thing about it, like I said, is timing. So if you get into a trend late, you could still make some money. Okay, it's not like you can't make money if you get in late. But if you're late to the party, you're missing out. And so the earlier you can get in on a trend, the more profitable you can be. Now, the flip side of that is when that trend reverses and starts heading down, if you don't know that it's going to head down ahead of time, and you don't give yourself the opportunity to get out before it reverses on you, now whatever money you made, you're giving back to the market.
Oh
And
yeah.
so, it comes down to timing. You got to be in when the trend begins, and you got to know when that trend is going to end ahead of time
Well,
with a
that's what
high,
that's
so
what
you,
I had here. You had a press release out that people are all. And by the way, this company just 2017 won a huge award in their market company of the year. But you had this in a press release, and I know this is not what people see when they see your system, but this try to give an idea of these little charts and the trend indicators and how
yep.
you showed me the crossover. The crossover
Yeah.
was what killed me.
Well, that's, what's important about that crossover is that blue line that you're showing up there on the screen. That's a predictive indicator. So that blue line up top is predictive. And so when it crosses above the black line, that's telling you that the trend is going to go up. It's clear as day. My 7-year-old daughter can tell you exactly when a trend is going to be in and exactly when a trend is going to end. Not because what we're doing is simplistic. It's very complex under the hood. But the way that we deliver the information to our customers, yes, we've worked very hard to make it so that there's no ambiguity, there's no guesswork, there's no way you can mess it up. If you pay attention to what the indicators are showing you, you will know ahead of time that this trend was going to begin back, on this chart back in like October, beginning of October. And yeah, like you said, you could have made an extra 40% in less than a month. That's why our software, it pays for itself. A lot of people think, well, I gotta pay for this tool. It's going to be a cost. It's not a cost at all. It's an investment that will pay you back over and over and over again because it will give you that information you need.
It was so interesting because you had the predictive trend, and that you could just watch it where you could see where the blue was about to hit the black, and when they're touching the black, that's when your system says caution, caution, yep. Caution, caution. And for me, I go, okay, that means I'm going to start pulling profit out. And then when that little blue suddenly shot underneath that black, it was like, it's kind of like, it was like, hey, get that parachute on. It's time to jump.
Exactly. Yeah, that's exactly right. You're looking at this indicator. This is like your GPS. This is going to guide you as to what's going to happen. It's going to tell you coming up, the market's going to start trending to the upside. Okay, now it's going to start weakening. Oh, now it's going to start going down. You get all this information ahead of time, and you're able to position yourself properly so that you can take the maximum profit out of that market.
Yeah, and once again, what I want everybody to understand, I think the main takeaway that I had, and if I could just touch on it real quick here, the main takeaway is that you can't watch, I don't care if it's a cryptocurrency or a stock, you can't watch one thing in a vacuum. There are so many factors that can have impact, and the more data you have access to, that gives you data about the thing that you want to ultimately make a decision on, the better. And that's what I got.
You're right about that, and I'll tell you something else. Just talking about Bitcoin for a second, our artificial intelligence engine, and this is something we have a patent on, by the way. We have two patents, but one of the patents that we hold is on our artificial intelligence's ability to identify which other markets, which other stocks, which other currencies impact Bitcoin. Okay, so we have identified there are approximately 31 other markets, other stocks, other currencies that drive, impact, push, pull, and influence the price of Bitcoin. And so the AI has selected what are those 31 other markets. It weights each one of them because they don't all impact Bitcoin to the same degree. So they're all individually weighted. And then, and this is our second patent, it's using these predictive indicators, which give you leading forecasts. It's able to then indicate those trend direction. But the reason why, and someone asked me this today, we had another little interview where someone was like, God, how is this thing? This is unbelievable, because this whole downturn, people are freaking out about Bitcoin. We forecasted it. We knew it was going to happen weeks ago. It was predicted, it was forecasted, and now it's just playing out as expected. Why is it so accurate? Why is it able to do that? Because we're not just looking at Bitcoin as if the price of Bitcoin is unaffected by everything else. It's other stocks, it's other currencies. Gold, the price of gold has a direct impact on Bitcoin. And so all of this data is being used to forecast the price of Bitcoin. And this is something that's all happening behind the scenes. It's not something that our customers are doing. The software is doing it for them,
Now, listen, I told everybody here that you would give us at least one little chunk of gold, and I'm going to ask the question. I know I'm not going to put you on the spot too much, but maybe I will a little bit. If you had a choice right now, and I know you probably have your platform right in front of you while you're looking at it, what has a better short-term play potentially? Would you say Bitcoin or Ethereum? Which of those two? Because you were showing me the other day that right now the trends are starting to get back in maybe a positive direction soon. But go ahead.
Yep. Yeah. So I'll tell you what was happening December the 18th. Okay, if you guys want to write this down, December the 18th of 2017. Vantage Point forecasted the price of Bitcoin was going to start dropping. Okay, so if you go back, you look at a chart, That's when we forecasted this to start going down. Okay. As of right now, and I did the update because this updates each evening, 6:30 p.m. It updates. It gives you all the information you need to know for the next day. As of 6:30 p.m. when I ran the update, it's still forecasting Bitcoin to go down. So as of right now, this is not expected to turn and start going up with any sort of momentum. But as it's continuing to go down, when it finally tells you that it's hit that level where it's going to, reverse and start going the other way, that's a tremendous buying opportunity because now it's on sale. You're buying it at a discount, huge discount. But as of right now, we have not got that indication. Could happen tomorrow night. Could happen the next night. We're waiting for the artificial intelligence to indicate when Bitcoin's expected to reverse and start going up. And the people who know that ahead of time are going to go on a buying spree, and they're going to ride it all the way up and laugh all the way to the bank. So as of right now, nothing on Bitcoin to do. Just wait until Vantage Point forecasts that it's going to start going up. Now on Ethereum, this is an interesting one. I'm glad you mentioned that, because these are the three that we forecast in Vantage Point: Bitcoin, Ethereum, and Litecoin. Now in Ethereum, we forecasted on the 16th or 15th, I think it was, that Ethereum was going to start going down. But over the last, about a week and a half or so, the indication has been mixed. Okay, we've got a couple different indicators. You really want them all to be in confirmation with each other. If they're not in confirmation, it's best to kind of sit on the sidelines and wait till everything's pointing in the same direction. So what's happened is the indicators are kind of mixed. They're saying, just kind of take a step back and wait and see. And if you look at a chart of Ethereum over the last couple weeks, that market really hasn't done much. It's just kind of gone up, it's gone down, it's gone up, it's gone down. It's in what's known as a trading range, okay? But when the indicators, and I think it's going to happen pretty soon, it's just a matter of when now, when these indicators get into confirmation, because one of them is already starting to point up now, we're waiting for another one or another two indicators to confirm that, then this thing's going to go. And it's a matter of timing.
So what I'm hearing from you now is if anybody here in our audience has been thinking about, hey, it's time to maybe start grabbing up some of that Bitcoin because it's low, you're saying, hey, it ain't there yet, folks. So that's the kind of that. And believe me, Lane has just given us a cursory explanation. I mean, you should see he's got specialists on the phones that just work with the clients. Oh man, are they smart. Anyway, we're running a little late. I'm sorry I held you this long, Lane, but I just want to tell everybody, I asked Lane if he would at least for my audience, allow people to at least get their own free a forecast on what's happening with a couple of the currencies. He hadn't talked that you could probably get a lot more data. He didn't say anything about Litecoin. I don't think he should. I think there's a real surprise there. But folks, if you want to go ahead and get that free, it's a free forecast for you. So you should go to I forgot that what I have it up here. It's Vantage. What is it? It's Vantage Point. Go ahead.
VantagePointCrypto.com. If they go to VantagePointCrypto.com, they're going to get that page that you're showing everybody right now. If they fill that out, they give the email, the name, the phone. We're going to contact them tomorrow. We're going to give them a free forecast, show them what the software's forecasting right now, and show them how they can position themselves to profit from it. And I didn't mention this to you because I wanted to kind of surprise you and surprise everybody. But if they mentioned tomorrow, when they talk to one of our reps, mention that they're on your webinar tonight, we're going to give them a very substantial discount on the software.
Oh boy, that's fantastic. So Lane, I'm running late. I'm very thankful you decided to come on. But and folks, if you can't find the site, like I said, just email me. Hey Bob, give me that website address again, so I can get a free forecast. That'd be fantastic. Thank you very much, Lane, for joining in. You may want to listen into this last piece because we're going to be. This is part one of our three-part series on the history and why there's a cryptocurrency in the first place. Thank you very much for attending. I appreciate your time, Lane.
Hey, thanks, Bob. That was fun.
Absolutely. Folks, we're running late, but I really want to get into the next subject because if you understand the start of the crypto world, you will know what types of currencies to keep your eyeballs out for. Okay. So when we talk about the start of this whole world, we're talking about money. That's for sure. And money now can go through the internet. And that's what you need to understand. Right now, the difference with, between now and even 10 years ago is you couldn't shoot money through the internet. Money was something that would be passed back and forth from bank to bank, but that's big wires, or you could use money to hand people. But now you can take money and fire it across anywhere on the planet, buy things, purchase things, buy the coins, sell the coins. But that was not possible at all until one thing happened. People had to feel safe about the money. And until they felt safe about how they sent money across a system, they wouldn't get involved with online money. So there are two technologies out there: encryption, which safeguards money, that's number one, and then counterfeit detection, that's the other. Tonight we're going to focus on encryption. And real quickly, just to clear a term here, encryption is the action of disguising information so that it can be recovered easily by the person or persons who have the key, but is highly resistant to recovery by persons who do not have the key. Got to have the key. And when we talk about crypto, we have to go way far back. Okay. The first time there was any type of cryptography or crypto or encryption, believe it or not, was way back in the time of the Egyptians. So I told you we're gonna go way back here. So in Egypt, they had what's called non-standard hieroglyphics, and that's exactly what you are looking right now is at actual crypto language, and this is 1900 years BC. 1900 years BC. This is non-standard hieroglyphics, okay? And then came the next major development. Like I said, I'm going to kind of walk you through some really cool stuff here. I'm going to pull up my next thing here. And the next thing, got to pull the right graph up here. Okay. Okay, take a second. Sorry for the slow. Okay, so the next thing that happened was we had, here we go, here it is, the followers of Muhammad, the Muslim faith. They were the first ones that consistently used encryption. Now, the Egyptians used it a little bit. The Muslim faith used it a whole lot. And that's what you're seeing literally right there. That was the second mass use of crypto. All right. The third kind of high level of cryptography and encryption started in the 15th century by a fellow named Leon Alberti. And that's the famous unbreakable wheel. That was the first type of encryption that was developed where you had to know how it was developed to crack the code. With the earlier methods from the Egyptian to the Muslim encryption, you could figure it out. It would take you a while, but you could figure it out. But Leon Alberti developed the unbreakable wheels. And that was actually very helpful because there was a lot, this was back in the 15th century, and there was still quite a bit of suppression of religious groups, any type, various groups. You had a lot of suppression on education. So they needed to basically, if somebody was going to try to send important information to somebody else, they didn't want to find themselves, up on the rack or anything or getting burned alive. So that's why they used, the unbreakable wheel. Then we kind of move up to the next level of encryption, and that is the famous Enigma machine. Okay, now this was actually developed in Germany right after World War One, and was originally developed for businesses. That was how they kept their trade secrets. But then a little crew came along called the Nazis in 1932, 1933, and they were very concerned about the French and the British and the Polish and the Russians finding out that they were about to make the big decision to increase their armies dramatically. They were going to start violating the rules of, could they build tanks, what kind of navy they were going to have. And they didn't want people to find out what was going on. So that's why they took the business Enigma system and then started upgrading it for military purposes. So the interesting thing that happened is that certain Polish scientists got wise to this. And interestingly enough, one of the biggest errors in World War II, which ultimately caused the downfall of Germany, among many, but one of the biggest errors was the Germans had, believe it or not, missed out on, when they invaded Poland, they missed out on getting their hands on the machines that were duplicate machines that were developed by Polish scientists. If they'd have got a hold of those duplicate machines, you would never hear about the next thing. And the next thing was a fellow named Alan Turing, Turing. Now, this was a genius. And he was one of the first people who were working with these things called computers. That's right, Alan Turing. And he was hanging out at a place called Bletchley Park in England. And what they did is they had their hands on these duplicate Enigma machines that they got from the Poles, and they started working on the world's first standard computer system, and it was all designed to crack the Enigma machines. And that's what you're looking at right now. That's basically your first computer. I mean, there's others that are saying, well, this is the first computer. This is the one that was actually developed and used to crack the Enigma code. So once they had done this, the British they were able to find out every single major military move by the Germans. They knew exactly where they were going to bring their tanks, their forces, their troops, when they were going to do this, that, and the other on the Russian front, on the Italian front, in Europe. They knew ahead of time what was going on. And it has been estimated that without Alan Turing and this massive machine being able to crack the Enigma code, that the World War II was going to last 2 years longer, costing 14 million lives. That's the estimates that were placed on what difference that machine you're looking at made and what Alan Turing made. Alan Turing is considered one of the folks that saved more lives, probably in the top 10 humans in the history of the world in terms of just saving lives, because he's the one that cracked the Enigma code. And that brings us up to a little group called DARPA. Okay, that's the Defense Advanced Research Agency. Now, what did they do? Well, they had a job they had to do, and it's interesting. In the last few big developments in the area of computing and encryption, it's all been about military applications. You notice that? That's pretty interesting. It's, once the military saw a use for some of these things, all of a sudden a lot more resources came in to help develop it. So what DARPA was tasked to do is their job was, believe it or not, to somehow figure out how to develop a secondary communication system in the event of a nuclear war. So that was what DARPA was tasked to do. And they developed the whole concept of the internet, initially placing internet hubs at the whole kind of a cover story was to make to have libraries from different colleges be able to communicate back and forth. Well, that was kind of the cover story. The real story is that DARPA has been developing the internet so that they could safeguard communications, so that if there was ever a nuclear war, there would be some type of secondary method for the U.S. government to stay in communication with their people. So I wanted to show you this as our first step, because you need to know, well, where did encryption come from? It's always been about making communications unbreakable so certain parties could communicate to each other safely. And that if you didn't have Alan Turing, if you didn't have DARPA, if you didn't have the Egyptians, if you didn't have followers of Muhammad, if you didn't have folks like Alberti, you would not have had a way to safeguard money. If you understand that, you can understand where Bitcoin is going in the future. If you understand the importance of the encryption element. Now, on our next webinar, next Thursday, I'm going to be hit you part 2, and that's where we get into who developed Bitcoin and why they developed Bitcoin and what they were trying to do. And there were 2 specific events, worldwide events, one that happened in 2001, and I'm not talking necessarily about 9/11. It happened after 9/11, but something happened that has changed the game for encryption and crypto. And because of that event in 2001, and then because of another event in 2008, literally millions and millions and millions of people had had enough with regular currency and made the decision to do crypto. So I think you're going to, when I talk about those 2 events, you're going to get more of an idea of why crypto is where it's at and how you can take advantage of it. Because yes, you want to be able to buy coins and sell coins and make a lot of money, but that's one area. If you know all of the story behind crypto and encryption and digital coins, I know people on this call right now or in this briefing right now, you have ways that you can also make money in areas you may not even thought of. And right now we're at the innovator stage. Remember that. Okay, so let's go ahead and do our drawing here. We're going to go ahead. I'm going to put up random.org. Here we go. All right, here we are, random.org. Now, we have had so far, it looks like 220 people come into the system, because we have some people that come in and out, but it looks like we have 225 people in the system. So here we go. We put 225 into our little generator, and we're going to find out what's the lucky person to win 10,000 coins, and they'll be notified by tomorrow morning. Here we go. 5, 4, 3, 2, 1, bang. Okay, number 3. So whoever came really, 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 really early is the big winner. So if you came early and you were number 3, you're going to have a smile on your face. Okay, folks. Well, listen, once again, take advantage of going and getting that free forecast by our friends at Vantage Point. If you didn't write down the address, just email me at bob@digitalcurrencygrowth.com. That's bob@digitalcurrencygrowth.com. And I'll be happy to send that that website address to you so you can get a free forecast. And when you talk to the person on the phone, I want you to ask them about Litecoin. Okay, I'm not going to say anything more, but I want you to ask them specifically about Litecoin. Okay, thank you very much for attending. I appreciate the time that everybody has taken. I've got another huge surprise also for you next week. Maybe an amazing guest, but I think we had a great time tonight. Thank you very much, folks.